All right, so Lemonade reported Q1 earnings report, and surprisingly, it wasn't all that bad. They beat their own guidance yet again. They raised full year guidance yet again. So positives here. It's still losing a lot of money. And again, they reiterated that this year is going to be peak losses year. So should be improving coming up 2023. Whether that will happen or not remains to be seen. I don't have a crystal ball. But as of right now, what they're saying is actually happening. We have some interesting numbers here with cross-selling, bundling, etc. We've known for a while that that's going to boost the business. Basically, you're selling extra products for zero cost of acquisition because you already acquired that customer for the first product. Now, they did say that the acquisition of Metromile should be concluded in this quarter, so Q2. Maybe if something goes wrong at the beginning of Q3, but they're still very confident that it closes in this quarter. So the next one, we might actually see some numbers for Metromile. Now, when I'm talking in this video, I think Metromile reported earnings. So if you're interested in that, go look it up on their website and see how well or how bad they are doing. Now, I want to add that there are again some changes in the earnings report and we have nothing new on Europe. And you know what? I'm happy with that. Let them focus on the United States because that market is, well, it's huge. So focus on that. And then eventually we're gonna look and see what happens in Europe. But right now the focus should really be on the United States, expanding there and adding more and more customers and adoption across products. So let's have a look at those numbers, shall we? So in-force premiums for this quarter grew 66% year over year to $419 million. That's above their $410 million guidance that they gave us. Premium per customer grew 22% year over year to 279. Total customers increased 37% year over year to 1,504,197. Quite a nice addition there numerical wise. Gross earned premium grew 71% year over year to $96 million, again beating their expectations of $94 million. And then gross loss ratio is down by a lot, but if you remember last year Q1 was the Texas freeze one, so it's a bit normal to see that huge decrease, but it's still very high, 90% gross loss ratio. Gonna touch on that in a bit. But first, let's talk about this, the bundling, the cross-selling, because this was the first full quarter which all Lemonade products, renters, home, life, pet and car, were available in a market. With this mega bundle currently available only in Illinois and Tennessee, you're the only 10 I see, if you remember the joke, these markets offer a peek into how meaningful growing with our customers can become as we roll out these products nationwide. So this is the promising data. After only one complete quarter, we saw 40% higher bundle rates in Illinois versus the rest of Lemonade market in the United States. The average dual product customer outspent the average single product customer 3-1. For triple product, the ratio was 7-1, while for customers with all four products, it was 9-1. Consequently, annual dollar retention, ADR, in Illinois rose to 90% in Q1 versus 82% for Lemonade overall. Yes, obviously we would like that number to be at 100%, but right now it's really nice to see that at least when you have more and more products, that ADR is much higher than Lemonade's overall one, which is 82, which is below average in the industry. And the impressive numbers here continue. So total premiums from single product customers grew 61% relative to Q1 last year. Premiums for customers with two Lemonade products grew at a pace of 140%, and premiums from customers with three products jumped 390% during the same time. And obviously they had no four product customers last year, so there is that, but pretty inspiring numbers here. Now they talk here about the 90% loss ratio, but they are still expecting to have a loss ratio comfortably within their 75% target in the long-term future. You might say, okay, that's fine, talk is cheap, but let's see what happens. And I agree, talk is cheap and we have to see numbers someday. Again, don't forget Lemonade is extremely young and well, it's their first quarter where all products were available in just one market. Remember, in insurance, the earlier customers, so if you're in the first year, maybe first and a half year, usually those are the customers that hurt your gross loss ratio. As they grow with you, they tend to hurt you much less. And also loss ratio, as they say right here, are a lagging indicator. And improvements in pricing, underwriting, and segmentations take time to get approved. They also talk about how inflation hurt the business because they have to, adjust claims for inflation. They also have filed 100 applications for rate changes over the past year, and they expect to see rates move back in line with risk as they receive regulatory approvals. Now, during the earnings call, they did say that they don't know exactly when all those applications will be approved. Yes, there is some pushback from some states. California, as always, an issue, but at least they knew this was happening, so that's why they filed those applications early on. Now, again, this is a, let's say, short-term headwind that might maybe eventually turn into some tailwind. Now, before I continue, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, so as you can see right here, the growth here has been pretty well, right? Yes, the stock price has gone up and down, and then down, down, down. But as you can see, in-force premiums, since they went public, has increased quite significantly. And there is really no indication of this stopping anytime soon. Now, with regards to revenue, that increased 90% to $44.3 million, again, beating their own guidance. But this is primarily due to the increase of gross earned premium during the first quarter and an increase in ceding commission income from reinsurers. At first, it got hit because of this, but now it's a bit of a, let's call it, tailwind. Gross profit for the quarter was $10.2 million, increased by 8.3 or 437% as compared to the same quarter last year, primarily due to an overall increase in total revenue in the period. And obviously last year there was the Texas freeze, so negative impact there. Adjusted gross profit of $16.3 million increased by $11.3 million or 226%. Same explanation here. Now, net loss was $74.8 million. Again, still a money-losing business here. Operating expenses also because of sales and marketing and the addition of new, workers, let's say. This is why it's increased 68%. And then lastly, adjusted EBITDA loss of $57.4 million increased by $16.1 million as compared to the same quarter last year, primarily due to increased operating expenses. Now remember, I'll reiterate it, they expect this year to be peak losses. And before I end this video, so guidance for the second quarter, in-force premium to come in between $445 to $450 million, gross earned premium of between $103 and $105 million, revenue $47 million at the midpoint, adjusted EBITDA loss of $67.5 at the midpoint, then stock-based compensation expense of approximately $15 million. We're going to talk about that in a bit because yes, it is a big number. As you can see, for the overall, for the full year, they expect it to be approximately $60 million. Last time we got $80 million, so okay. But yeah, the main reason why stock-based compensation is that high is because, the plans that were made when the stock was extremely high are still to be executed. So that's why, you need to pay up. Yes, the stock price is down, but you still need to pay that same dollar amount. So short-term headwind. And then once that's over, let's hope they don't give anyone $100 million in stock-based compensation when they're losing tremendous amounts of money. But overall, I'll be very honest, stock price, put that one on the side because obviously it has been horrible, but this quarter has been, in my eyes, much better than the last one. And again, I'll give them time to execute. Let's see next quarter, hopefully this quarter we get, Q2, we get the approval of Metro Mile, and then we start seeing some numbers. seeing them expand outside of Illinois and Tennessee with all of those products, and we should see some positive traction for the business. Market does what the market does. We'll have to wait and see. Again, it's an extremely small position for me, so I don't really care much. So that will be it for this video. Obviously, do share your thoughts on this quarter. Do you still own Lemonade? Have you sold in the past? Let me know down in the comments below. And if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next video, which is SoFi. Bye bye.